Hello and welcome to my channel. Today is Thursday, last day of the month. It's a very important day. I know it seems like every day is important, but today we can expect volatility at any point, any time, it can happen. So we need to be prepared. We need to have levels. So let's start by checking how the monthly candle looks like. We are closing this month. I don't know about good high, bad high theory that I'm using every day, how it works on monthly candles. We don't have enough data to support this. We don't have enough data to have good statistics, but we keep making statistics, we keep recording that data, so I need to pay attention anyway. What is a good high? Good high is a strong candle and the high is taken, and then when it's closing red, it's considered to be a good high, and then it can go down. For example, strong close. This candle took the high. Every time after a strong close, you expect the high to be taken. And if the next candle closes red, you expect to go lower. Basically, this is a strong close, a high is taken, and then we see massive downside. This again, strong close, high taken, and then we see massive downside. This was not a good high, but we are talking about monthly time frame, so 48,000, I'm expecting there to come back anyway. So monthly resistance around 48k, monthly support around 30,300, 400. So when we close this candle, it's not gonna close red because it would need to go down to 34,500. It's not gonna do that today. Could happen, but it's not gonna happen. Not likely. So this candle gonna be a strong close. So we expect the high to be taken again. Let's go to weekly chart. So from this chart we can expect the high to be taken. That's all we need to know. Let's go to weekly chart. Consolidating in an uptrending kind of pattern, some kind of wedge, and usually this is a bearish pattern, but not at this point. Like this would be bearish because we are coming from the downside. You expect the trend to continue. We are coming from the upside this time, so you expect this to break to the upside. And last week took the high and closed green, so this week we expect the high to be taken. It was taken again, and we are looking to close this green or break out at any point. Daily chart, consolidating on the highs, showing some resistance but not rejecting, and it's holding out. I expect the high to be taken as long as we don't lose 34,500, which is monthly open basically. Expect the high to be taken. And now let's see what I had yesterday, what we had yesterday, and what we have for today. So yesterday I uploaded a video around here. So what happened? It's kind of too simple, which is strange. Usually when the market clears a lot of positions, clears the OI and makes a big move, trading becomes easy until there is too much condensed price action, too much trades in one place, and then it becomes tricky. So what do I mean by easy? You see this move up, this squeeze, you take a golden pocket, you see how easy this is. How much did it go down? Over 1%, 1.5%, easy. And what happened yesterday? You take the high, after you make 1.5 year high basically here, or you can just say this year's new high. This was new high. Obviously there was a lot of stops hitting there, and people become scared. They don't know what to do. And when people don't know what to do, then the technical analysis starts working. Wrong tool. Let's see, golden pocket. Around here. You see the touch? Similar as here. And again, we get almost 2% move down. Very simple. And it kind of catches me off guard because it's too simple. It's usually not that simple. And we went down to take the lows here. After taking the low, I expect price to bounce. But since this is kind of strong momentum, I don't expect the price to bounce straight up, and that's it. It's finished, downside finished, we reverse now. No, it takes some time. So instead what we did, we consolidated in this place at the lows of the new range basically. We are consolidating and we take the high, we take the low. Both are tradable opportunities, and usually it is this easy. Usually it's just that easy, that simple. You just need to recognize that sharp moves are predicting ranges. This is sharp bounce, you can predict range. And taking these two pivots, that's enough for you. You just have to trust this. Do you expect this to stand on one leg, make a higher low, and then break out? It happens sometimes, but for me, it's much more likely that we go take the low. And the low was taken yesterday in the evening, and it happened at exactly the market close in US. Very good time to open a trade, market close. And the drop happened on this was the market close. The drop started on market open, sorry. So sometimes you get pivots, which means reversals. Sometimes you get continuation on the session starts, and you need to recognize the context. I didn't recognize that this is gonna be a strong move down. I didn't recognize at this point. For me, this was still uptrending. But here, you recognize that this is ranging, and you recognize that this is a good opportunity to long when it's taking out the low. This was easy long. So what happened next? When you take both sides, usually taking one side is enough, but you take both sides, you expect a breakout. They opened, you test the midpoint basically, and in other perspective, this is actually POC here. So yesterday's POC was here, point of control. Day opens, you backtest point of control and bounce up. Now it would be funny if this is the point of control. Well, kind of, but no, it's not. 38107. I mentioned this is important level. And basically we come back to the order block. Every strong, sharp, fast move is gonna be recovered. So expect that. Strong move, recovered. Strong move, recovered. That's why order blocks work. Because every move gets recovered. Price is either going for liquidity or it's filling imbalances. This is filling imbalances, which are created on strong move. This is going for liquidity. This is going for liquidity. This move is filling imbalances. This one went for liquidity, and actually probably some imbalances here. Sharp bounce, recovered. Quickly check ATAS, what's happening. Currently, there is showing some support here. We recovered VWAP, we recovered daily open, and there was support on the VWAP, massive support. Price is still kind of going down now, but that's fine. So we see proof of support. What else do we see? We saw some resistance here, but it was broken. Okay. Imbalances. Yes, what I said about imbalances. We recovered this. And actually on that drop, we recovered some imbalances here. One touch and another one here. Why W formation works? Another observation, why it works. Because first move is usually liquidations, second move is a trap, W formation. You liquidate and then you trap. How do I know it's trapped? Because you see shorts open here, a lot of shorts. You see short imbalances on the lows, that's a trap. So now this move down, we have bullish imbalances here. We keep ranging basically in the same range at the moment. That's what I see from this and from this. We see some support trying to break out, but this is still a range. From this chart I can see that they opened, we come to previous day value area low. No, actually here we back tested the point of control value area high of yesterday, almost to the dollar, actually maybe to the dollar. Straight down to the value area low of yesterday. We are playing in yesterday's range, that's what I mean. And then bounce, value area high to value area low. Recover the point of control here, back test it and try to move up. So far this is a range, but I see that order flow is kind of bullish. So far it's bullish. Let's go back to trading view. So we need to prepare something. So basically range high, as you see, could be going down to range lows. Daily open here and VWAP. We are on VWAP. Okay. Losing point of control, it's okay. So what do I have today? Today the trade is taking out this low. It could be nasty, kind of panic, so be careful here. But one opportunity is weekly open long right here, and we are basically filling this sharp move up. It's not finished until we get to weekly open. We could obviously go up from here, but this is one opportunity that I'm interested in. A bit lower, higher time frames. Let's see what we have. Pivots are filled. This bad low, I don't like it, and I would like this to be taken out at some point, so I leave this X. This is interesting, but at this point I don't think that this is an important consolidation, so I don't pay too much attention here. That X, 25, 300, very interesting place. We can expect a lot of volatility, so be careful. One place weekly open, another place naked point of control 36,500, and then 36,300 more or less going into this wick below higher lows. All higher lows, this is like going for liquidity. And for short, I'm not gonna short, I'll be clear, because higher time frames I expect higher, order flow is bullish, so all this is coming from some fugazi volatility, panic. Sometimes it happens, I don't mind, this is long opportunity for me. For now I'm looking for the upside, and the lows could be finished here. This is some bonus if it gets there. Always think, what can price do before it does what you think it will do? I think it will go up, but what can it do? It can take out this low easily. So be careful with longs. And once we break out, I would expect a big move up. Strong move up. I don't know where. I have some levels here which you can note if you want. And what I will be expecting, definitely not shorting. Like, no way you need to short this move up. No way. You're not gonna catch the high. And if you do, it's not gonna matter in the long run. Because you know why? Because price is gonna go up, consolidate for 5 days or a week, and then go down. Okay. Or maybe even go higher. So 15 minutes almost up. So have fun. Hope you learn something and have a good day trading. See you tomorrow.